Good morning, and welcome to your Stock Sense morning brief for Wednesday, December 24th, 2025. I'm Malik, and today we're examining a market that experienced a slight retreat, closing just below yesterday's levels amidst a backdrop of mixed signals. The KSE 100 index ended the session at around 171,100 points, marking a modest decline of about 130 points, or nearly 0.1% from its previous close of just over 171,200. This followed a day where the index opened with some strength, but couldn't maintain its upward momentum. Total traded volume for the day was healthy, coming in at over 650 million shares, with a total traded value exceeding 28 billion rupees. Looking at the market breadth, we observed more decliners than advancers, with 287 stocks moving down against 151 advancing, and 43 remaining unchanged. This suggests a cautious sentiment pervaded the market, despite the relatively small percentage change in the index. Turning to sectors, automobile assemblers notably exerted the most downward pressure, contributing significantly to the negative movement. Investment banks, investment companies, and securities companies also pulled the market lower. On the brighter side, commercial banks offered some support, helping to cushion the overall decline. In our technical analysis, the overall sentiment for moving averages remains strongly positive. All key exponential and simple moving averages across various timeframes, from the 10-day to the 200-day, are signaling a buy action. This indicates a robust underlying trend. Looking at our pivot points, the KSE 100 is currently trading above its classic R1 pivot point of around 170,100 points, which now acts as an immediate support level. Looking higher, the next significant resistance appears to be around 173,400 points. On the corporate front, we have a number of board meetings scheduled for today. Agritech Limited, Habib Metropolitan Bank, Fauji Fertilizer Company, DM Corporation, Crescent Star Insurance, Dynia Pakistan, and SG Power Limited are all holding board meetings to consider matters other than financial results. Meanwhile, Noon Sugar Mills, the Fao Industries Corporation, and Baba Farid Sugar Mills are meeting to approve their annual accounts for the year ended September 30th, 2025. In macro developments, we've seen some significant news that could shape market sentiment. On the positive side, the International Finance Corporation announced its first local currency investment in Pakistan, providing substantial long-term financing of over 33 billion rupees to Engro Fertilizers. This is expected to strengthen the agriculture sector and reduce exchange rate risks, marking a landmark development. Additionally, a major privatization event unfolded with the Arif Habib Consortium successfully bidding 135 billion rupees for Pakistan International Airlines. This marks the country's first significant privatization in nearly 2 decades and signals strong government commitment to economic reforms. Furthermore, banks' massive lending of over 1.5 trillion rupees to the private sector has been a key driver, fueling growth in large-scale manufacturing. However, on a more concerning note, food imports have surged by over 28% in the first 5 months of the current fiscal year, highlighting persistent domestic supply challenges and impacting the balance of payments. Moving to institutional flows for yesterday, December 23rd, we observed that foreign institutional investors were net buyers, with a net inflow of about $0.8 million. Conversely, local institutional investors were net sellers, with outflows also around $0.8 million, essentially balancing out the foreign buying. Breaking this down by investor category, local banks and DFIs were the strongest net buyers, bringing in over $1.7 million, followed by foreign corporates and local individuals who also showed net buying. On the selling side, mutual funds led the outflows, offloading over $2.1 million, with other organizations and insurance companies also being net sellers. My take for today is that the market continues to navigate a delicate balance. We're seeing strong positive signals from significant economic developments, like the IFC investment and the PIA privatization, which should instill long-term confidence. However, the slight dip in the index yesterday, coupled with net selling from local institutions, suggests some profit-taking or caution despite these positive catalysts. Investors should keep a close eye on how these institutional flows develop, particularly how local sentiment responds to broader economic news, and whether the KSE 100 can maintain its position above key technical support levels in the coming sessions. That's your Stock Sense morning brief for today. Thank you for tuning in. Remember, the information shared here is for educational purposes only and should not be considered investment advice. We'll be back tomorrow with another update. Until then, invest wisely.